So now, without further delay, let's begin today's event. The Future of Mortgages is Digital, sponsored by Freddie Mac and hosted by National Mortgage News. It's my pleasure to introduce your moderator for today, and that is Jim Erickson. Jim, you have the floor.
Thank you, and hello, everybody. Welcome to our session today. I've been looking forward to this, talking about the future of mortgages is digital. I'm Jim Erickson, and I'm going to be your moderator today, conducting some back and forth with a couple of excellent speakers. Real briefly, I'm a market research analyst. Formerly, I was editorial director at several publications, and I frequently work with organizations like National Mortgage News to help bring these sessions forward and hopefully generate some good questions and good dialogue with our expert speakers who appear on this. And just as a reminder, that's a great reminder to you to please ask your questions while you have this opportunity today. We will have an opportunity to follow up with you. But, here's your chance to talk to a couple of folks with boots on the ground and a lot of experience in eMortgages and, of course, the Freddie Mac view on things, too. So, obviously, it's no surprise to anyone that COVID-19, other geopolitical events are really increasing demand for digital solutions and the relevance of e-signatures, e-closings, e-mortgages more than ever. So we're going to go through some of those things today. We're going to have, as I mentioned, two speakers you're going to be hearing from. I'm going to jump ahead real quickly. You're going to hear from Raj Panaganda, who is the eMortgage program lead in Freddie Mac's single-family business. He is responsible for managing, improving eMortgage program, and in addition to identifying and managing internal strategic initiatives, he works closely with the industry stakeholders to increase the eMortgage adoption. And you're also going to be hearing from Brenda Usher and have an opportunity to interact with her today. She's a COO at Land Home Financial Services, a long career in the savings and loan industry and all facets of mortgage lending, including subdivision lending, wholesale correspondent operations, licensing and compliance, et cetera, et cetera, et cetera, and the Government National Mortgage Association, Ginnie Mae. So briefly on our agenda today, I want to talk about what we're going to do. We're going to have this introduction. We'll meet with Brenda and Raj and talk through some of these issues of eMortgage benefits, eMortgage adoption, some of the challenges faced by lenders today, sort of the state of the industry. We'll go through some best practices and lessons learned, which I'm sure everybody's looking forward to, and the Freddie Mac approval process, too, which Raj will help us understand a little better. So, again, this is a great opportunity for you to get your questions into these folks, and we are recording this session. We will have a playback of it available for you as soon as it is available to us, and we will share that with you. So why don't we kick things off here with Brenda, and just as a helpful hint, I'm going to advance us to a first slide here, introduction on some of the benefits of eMortgages, and I want to start things off with Brenda today. So, Brenda, thank you for joining us and sharing your experiences today for starters. And maybe as a lender that has been originating eMortgages, why don't you bring us up to speed on how the eMortgage process helped you deal with COVID-19 and sort of the digital transformation issues more broadly?
Okay. The COVID-19 actually was very timely with the eMortgages because we were just advancing into the RON application of e-closing, and this forced it. We had many, many customers that did not want any type of contact. They didn't want anybody coming to their homes. They didn't want to go into escrow offices. And so one of the conditions to get a mortgage was, can I have a contactless mortgage? And so we were able to advance a little bit further into that a little bit quicker than we would have normally due to COVID. Now, as far as the other advantages of the e-closing during COVID, for us, our volume exploded at a time when we would have thought the opposite was to occur. And so we were caught short a little bit with warehouse capacity, so this enabled us to turn our lines a lot quicker. We were having problems with BONI, our certification process, and so just even delivery of the notes from the courier services. I mean, we just had a number of issues that we benefited by implementing the e-notes, and we were already fully implemented, but we just ranked. Sorry, we just increased the number and the percentage of loans that we did in the e-closing process. So that was one of the benefits for us during COVID.
Mm-hmm. And obviously, you folks were sort of in line and in gear for this transition. I suppose having the benefit of this transformation underway, how did that sort of prepare you for the unexpected in this case? Are you sort of glad you were there, or did you find yourself short on some aspects of this?
No, this was just one of those things where we actually had made a decision that was a very huge benefit to us during this difficult period of time. I don't think that if we hadn't already been so far into the experience of e-closing that we would have been able to get it going from start to finish. It did take us a lot longer than a typical company today, just because we started so soon into the process about 5 years ago, that today when somebody goes in to do e-closing, it probably takes a quarter of the time to get up and running as it did 5 years ago. So even so, I think that if we hadn't already had this product rolled out, we would probably just be implementing it right now, and pretty much miss the whole, the whole period where we really needed it. I mean, we're coming, like right now, I think that things are easing off, but during when it just first hit in March, this was just perfect. It was perfect timing for us.
Yeah. I think a lot of lenders are probably who did jump on the eMortgage trend are breathing a sigh of relief that they did early on. And of course, different folks on the call today are going to have different experiences on that timeline. But certainly the latency, the experience, the consumer experience, the borrower experience that is forefront in all these digital transformation movements was certainly, saw the benefits of that, but also the timeliness of note delivery, minimized delays, and some of the other benefits mentioned. And hopefully we'll get into a little more of that in our question and answers with the audience. But I'm going to turn over to Raj now to join us in the conversation and start talking. Give us a little bit about the current state. So eMortgages, Raj, you're so experienced in this. We've been talking about this for a long time, but what do you think is the current state of adoption of this process?
Thank you for the question, Jim, and good afternoon or good morning, depending on where you are. So, Jim, as you indicated, rightly so, the concept of e-mortgages has been talked about for quite some time. But the adoption has been low until recently because the industry was focused on various other priorities. But in the last couple of years, thanks to the collective efforts of various industry stakeholders, including Freddie Mac, we were able to build an ecosystem that helped lenders roll out this process quickly, as Brenda pointed out. So in the last couple of years, we have seen increased number of lenders in terms of both implementations as well as originations. And just to give you some numbers, actually, before I get to the numbers, let me also say what Brenda said, which is COVID-19 pandemic has a significant impact, positively so, on the adoption of e-mortgage process. And again, getting back to numbers here, this year Freddie Mac approved more lenders to deliver e-mortgages than last 2 years combined. And currently in the industry, there are a total of 71 lenders that can originate e-mortgages. And from a volume standpoint, industry has originated more than 285,000 e-mortgages this year, representing a growth of more than 265% compared to last year. So it's more than double compared to last year. And then the use of remote online notary technology, another aspect that Brenda mentioned in her remarks, has grown by more than 1,000% compared to last year. So whichever way you look at it, this I would say is the hockey stick year from a growth perspective, and and the other aspects such as entry of Ginnie Mae, Federal Home Loan Banks entering into the e-mortgage space, and the growing adoption of electronic recording across the nation, and recent Freddie Mac policy change with regards to permitting remote online notary policy in 45 states and DC. All of these factors would help this volume grow even further.
Absolutely, and looking at this this chart here, you can see very plainly the acceleration. I guess how much of this acceleration, and I'm sure some of it at least, but do you attribute to the pandemic impact?
Oh, definitely. Some of this definitely is I can attribute to the pandemic, and there were 5 to 6 lenders that were actually able to implement the process in less than a month's time. So they came to us with very basic questions in the second or third week of March, and they were able to originate their first eMortgage by May 1st or May 2nd, something like that. So very, very quickly, they were able to come up to speed. And not only that, they were able to also originate, around 30% of their production as eMortgages in the months to follow.
And you're showing here the 71 originating lenders that have completed. What do you anticipate is the size or the volume of lenders coming on board now? I mean, would you expect that to have again or double within a time frame, or how penetrated do you think eMortgages are?
So if you look at the overall single-family originations in the industry, right, eMortgages probably represent around 4%, maybe 5% currently, and I expect it to double next year. So while that still sounds low, you should look back at 2018 or 2017, where eMortgages were only, like a less than 0.5% of the overall origination market in the industry. Right, so from 0.5 to getting to 4% now, maybe 5% now, and then 10% next year. I think that's a significant growth. And you also touched on the nature of the lenders, right? The 71 lenders included here, right? They represent a wide spectrum. It includes large banks, it includes large non-bank lenders, it also includes some small community lenders. So size is not the factor. I think people that have realized the benefits of this process, have been able to quickly embrace it. And of course, pandemic has definitely, pushed them to embrace it much, sooner than what they probably were planning to. But all in all, I see this as not a temporary blip or temporary, spike in the adoption, but rather a more permanent shift towards the digital mortgage process.
Yeah, as an analyst, this kind of chart's very interesting to me to watch the acceleration and the attribution of it due to COVID. So, yeah, I say we're on the accelerating curve here. It'd be very interesting to hear some questions today from folks on various points of that who might want to describe their own transitional experiences and their own challenges in dealing with that. Why don't you talk a little bit about this slide here on the attachment C?
Yeah. Definitely. So this slide shows the list of states where Freddie Mac currently permits remote online notary process. And as some of you may be aware, there are only around 30 states that currently have any kind of legislative framework permitting remote online notary process. So Freddie Mac, along with Fannie Mae, under the FHFA direction, decided to expand the list of states well beyond what is permitted by the legislation today, because we felt that due to the nature of the environment we are currently living in, there is a greater desire from consumers and of course lenders, their own staff as well, right? Nobody wants to get sick, just for closing a home loan. So we realized there is a greater need for people to conduct transactions in a contactless environment. So after careful analysis for legal environment, Freddie Mac came up with this 45 state list, which we believe will provide a greater flexibility than what is possible otherwise.
I see. Okay. Are there any hitches along the way in terms of localities or regions of the country in implementing the permitted states?
I mean, each state is following their own course in terms of going through the legislative process. But what you would see is that what we have seen in the last couple of years is the number of states with the remote online notary policy, remote online notary related legislative framework has actually doubled in the last couple of years. So, and that, based on what I know, again, I don't track these bills on a regular basis, but based on what I know, at least there are 10 to 15, pending bills that may be called into discussion in the next legislative session across various states. So this number is only going to grow.
Right, and yeah, absolutely, and certainly the urgency. I don't see a lot of political roadblocks to getting this happening as easily and well as possible. Of course, we're not here to suggest any of the potential outcomes or political or legalities of the situation, but certainly the momentum is very clear, as shown on the previous slide. Well, let's move on then to again, this is more about where we stand, Raj. So you mentioned that the incredible growth of eMortgage, well, it's still a tiny fraction of the overall market. So what do you think needs to change to have lenders ramp up their eMortgage production?
Yeah. So as I mentioned earlier, while things are heading in the right direction, lenders are still challenged by the lack of electronic notary or e-recording support in some of their markets. This is especially problematic for lenders that operate across the nation, because what this means to them is, in some markets, they can have their borrowers e-sign the complete loan package, whereas in remaining markets, they need to have their borrowers wet sign some documents and e-sign the remaining documents. And unfortunately, the process of determining which loan documents can be e-signed versus wet signed at a loan level is completely manual. So lenders are limiting their rollout of the e-closing process to only those markets where they are 100% certain of conducting a full paperless closing transaction. In some cases, lenders are sitting on the sidelines waiting for the uniform adoption of this process across the nation. Right? That's one challenge. The other issue that is impacting adoption to an extent, and that's why we don't still see double-digit share of the eMortgage business, is that implementation process is somewhat complicated because there is lack of integration between e-closing systems and loan origination systems. So when a borrower opts out of the e-closing process, lenders are required to go through a manual effort to update the loan data. Like, just to give some more details on that one, Freddie Mac requires lenders to deliver a data attribute called eNote indicator whenever a loan includes an electronic note. So if a borrower opts out of the e-closing process, what that means is the loan will not have eNote. So lender has to go and remove that data attribute, but that process is manual because there is no integration between e-closing platform and the origination system. And then also most of the doc preparation systems do not have integration with the e-closing platforms today. What that means is that when a package needs to be electronically signed, the process of tagging the document for electronic signatures is somewhat manual, and that creates challenges for settlement agents. And in instances where you find there is an integration between the doc prep system and the e-closing system, it's mostly one-to-one. What that means is that if as a lender, if I want to use this doc prep system, then I can only use the e-closing system that has integration with this doc prep system, whether I like it or not. Right? Or if I want to really go with a cool platform that I really like, I like their pricing, I like their features, everything, right? Then I have to really change my doc prep system completely. And none of these are simple, right? These are all, really long endeavors. And then just to finish my thoughts in terms of the challenges here, the settlement agent adoption, I already touched upon it because, in most cases, the process of tagging documents is manual, so they're struggling with this a little bit. And then the servicing buyer outlets and aggregator outlets are somewhat limited. Again, all of these things are heading in the right direction. Everything, is evolving, and people are working towards building a better ecosystem. And so we are definitely in a much better shape than where we were compared, 2 years ago. And as Brenda pointed out, right, implementing an eMortgage process now is much easier, or it takes less time compared to what it used to take, a couple of years before.
Sure. And I really recognize, as an analyst, that, the two sides of this equation: the technology challenges of integration, the process, and the personal, the human processes are separate issues that keep intersecting and certainly cause a lot of problems. Do you obviously the burden, I think, is on the lenders here. If they're forced to reach a point to change a doc provider is an enormous burden for a lot of organizations, as you mentioned. Is Freddie Mac used to navigating these things sort of in line with the lenders in terms of assisting? Is there back and forth? What kind of resources do you find lenders throw at this kind of problem on the technology side?
Yeah, so we actually act as a consultant, and we went to a couple of lender sites and help them with process mapping from end to end, right? So we do that so we provide that consultative services. In addition, we have a dedicated team right now working on, working with various technology solution providers, trying to highlight these challenges. So we are actually, speaking on behalf of lenders to these technology providers and highlighting the challenges lenders face and trying to provide solutions that would make the life of lenders, easy. So that work is in progress, and we hope to address some of these challenges from a system integration standpoint. And then from a stakeholder adoption perspective, right, warehouse lending space, we made significant progress. Again, that is due to the collective efforts of industry. So right now, there are more than 20 warehouse lenders that people can use for eNotes. We are trying to take on similar effort from a settlement agent, adoption perspective. We are working very closely with American Land Title Association. So that's not just Freddie Mac, but also other agencies and other organizations. We are all working towards a common goal on identifying the challenges and coming up with industry frameworks that will address those challenges.
Yeah, it's not really the topic of today, but is there a good, strong interagency lender kind of board or association you mentioned? Do you think that's going to be a good resource for the folks on this call?
So I would say reach out to Freddie Mac, right? Because we actually talk to all these constituents. So
Gotcha.
Even if a lender is not part of all these different organizations, and I think it's quite it's quite time consuming, right, in terms of attending all these conferences and talking to various agencies. So Freddie Mac has a macro viewpoint on all of these aspects. So we definitely can help, and if there are concerns that we are not expressing on behalf of lenders, we definitely can do so once we start talking to lenders.
Yeah, absolutely. So thanks for. I think that's a very forthright and honest viewpoint of some of the challenges and the ongoing work going back and forth. And it's probably a good moment to jump back to Brenda here to sort of give us her perspective. I'm sure she can, and a lot of folks on the call can. And again, it's a good opportunity to ask questions today. But Brenda, from your standpoint, sort of what needs to change to have lenders ramp up eMortgage production compared to the traditional channels, or how far along are you on that, and what needs to be done?
I would have to agree with Raj on many of the items that cause lenders to pause or sit on the sidelines right now. Even given there were some other added benefits of COVID, which we are a Fannie Mae Freddie Mac seller servicer, and so we were able to bypass some of the problems with overlays or people pulling out of the market on the co-issue side for the eNotes. And so we were able to immediately start delivering to Freddie Mac the mortgages that we were doing as eNotes. And I think that until we get a little bit more participation in all aspects of the process from start to finish, I think it's going to be hard for lenders to be able to roll it out and implement it and actually be able to manage the different navigate through what they have to do with can I do this mortgage and eMortgage? What's going to happen if I do this one? And what happens if I accidentally do an eMortgage and I have to paper it out? So I think that there just has to be more standardization to the process. And I think that this year, I feel that we will see that. I think that we will advance forward light years because of what happened this year of the pandemic.
Mm-hmm. Yeah, a standard process. And Raj talked about some lenders looking to sort of finding national solutions to these kind of things. What do you think is the larger barrier on the sort of internal process side, the agent side, or in the integration and the accessibility of the technology? Right now, where are those separate challenges, and where do you stand on each of those relatively?
I think that's different for each lender because of the difference of size, how they conduct business, what channels they're in. I think that the compatible technology is huge along with the business process. Because a technology works for a company over here doesn't mean it's going to work for every company. So you really have to evaluate your business process and your workflow to make sure that whatever you choose actually is compatible to the way you conduct business. So I think that there's a lot of technology today that's not necessarily essential. It could be an add-on piece. So there's a lot of I think on the implementation. I think that there does have to be a certain amount of effort put into the evaluation of how you're going to implement it and what's necessary and what your goal is. Is your goal customer satisfaction? Is your goal cost benefit? Is your goal efficiency? So you have to have a roadmap, and you have to make sure that you are meeting all of the needs of your end goal. Right.
And the overall internal sort of business structure of the lender who is navigating this transformation, where is it being driven from? There's a bullet point in here in the middle. It says loan officers, account executives should be given talking points on e-close with realtors, borrowers, brokers. Alleviate security concerns. That may be a higher up the chain roadblock to implementing some of these systems. How broad is a program like this internally in an organization like yours? How far does it reach up and down the approval stack there?
You have to have buy-in from every part of your organization. You can't go halfway in. When we decided to do this, we weren't going to be that company that did one e-note. Oh, we've done an e-note. We decided that if we were going to go through all of the challenges that we faced rolling this out, we were going to make sure that we did it on a regular basis. Now, I have to say, we did do it on a regular basis, but I have to say that our percentage did increase dramatically this year, just like Raj had pointed out. Because it was for us, it was a requirement. No, it was a necessity. It wasn't a nice to have anymore. But in the beginning, we had to, one of the things that we did was we made every employee do an eMortgage, just the experience to kind of test it out, to let them know that it wasn't that scary, it wasn't that different. We held seminars with our realtors and our title companies, and we did road shows. So the security issue was one of the biggest things that we learned when we went out and did these road shows, is that they were concerned about fraud, and they were concerned about e-signing security. So those were some of the things that we learned just going out and talking and touching hands and just seeing what the reaction was to trying to roll out e-mortgages on a wide on a wider basis than just one little control group. So
right.
So
it sounds like you need. I'm sorry, finish what you're saying. Excuse me, Brenda.
Oh, no, that's fine. No, go ahead.
Yeah, no, it sounds like this is not one of those careful requirements gathering big bang programs that you have to be able to adjust and learn. I mean, the lessons learned on the bottom of this particular slide, become just facts of operation as you move forward and put out a fire, move on to the next thing. So let's carry on that point of view here to how some of these challenges impact your oops, excuse me, I think I advanced too far there. How some of these things impacted your eMortgage implementation, and how Land Home Financial approached the eMortgage eClosing implementation.
Well, we got a lot of pushback from the stakeholders just in general. The title companies are probably the biggest pushback. Realtors, occasional pushback, but the title companies were the biggest pushback for us. So I think that we tried different methodologies. We tried forcing it. We tried saying we do e-closings, so you need to learn how to do e-closings. We'll help you. We tried everything, and really it was hit and miss. And I think that once it started becoming more acceptable, then we don't get so much pushback now. But up until this year, we got pushback every avenue. Like every time we tried to roll it out on a widespread basis, we got pushback from some participant in the transaction. So I don't know I don't know how easy it would be today. I think it would be a lot easier today if you have an initiative to do e-closings, because I think it's just much more accepted today than it has been in years past.
Great. Okay. Okay. Well, thanks for sharing that. And as you mentioned, there's just so many experiences. We are getting some great questions coming in from people on the event today. Thank you for participating with that. And just as a reminder, we mentioned that we are recording this broadcast today, and we'll get a link back to you when we can for a playback of this, and you'll be able to review some of the materials being shown here. But obviously, a lot of good questions coming in. We'll save a little time at the end for that, so keep those coming. Let's turn back to Raj now for a bit here, and to talk a little bit about the approval process at Freddie Mac for the eNote and RON acceptance. And why don't you describe that for us first, Raj?
Yep, sure, Jim. So Freddie Mac approval is not required for lenders to deliver e-close loans if eNote is not included. So regardless of whether the closing is done through RON or remote online notary technology or in-person e-closing technology, as long as eNote is not included, there is no approval required. We require approval for eNotes because we want to verify that the lender's systems and processes used to create, sign, and store eNote are in compliance with various electronic signature, law requirements. I don't want to get into a lot of those because that is separate, class on its own, so to speak. But just to know that we need to make sure that these systems and processes that are used by the lender to create, sign, and store eNote are in compliance with the electronic signature laws. So if the systems used by lender were previously reviewed by Freddie Mac, then some of the steps described on this slide are not applicable. Like meaning, for example, we really don't need to review systems again. And what that means is that we don't need to have a demo and security scan review of their system. But if the systems were not reviewed by Freddie Mac before, then we definitely need to do that. And that is being done to address some of the security concerns that Brenda pointed out, right? There is a lot of concern about fraud within the electronic signature transactions. So we always want to make sure the systems used by lenders are, they do not have any known vulnerabilities from a security perspective. And if there are, we want them to address those vulnerabilities before we approve them to deliver loans that include electronic note to Freddie Mac. And so and most lenders actually use systems that Freddie Mac previously reviewed. So in those cases, the approval consists of testing to verify that lenders are able to deliver eNotes from their systems into Freddie Mac systems. And also they are able to conduct various MERS e-registry transactions. And for lenders that retain servicing, we require servicing procedures to make sure the procedures talk about various MERS e-registry updates required for life of loan events. And we require this because, the servicing of a paper note and servicing of a e-note is exactly the same, meaning the collection of monthly payments, disbursing those payments, collecting taxes and escrows, right, loss mitigation activities. All of those activities are exactly the same for both paper and e-note, except that in the case of e-notes, there is this system called MERS e-registry that establishes who the holder of that note is. So as such, that system need to be kept updated as and when life of loan events happen. So we want to make sure lenders have documented procedures to do that. Otherwise, it could lead to some enforceability challenges. And then, of course, the servicing procedures are not required if lenders are using a sub-servicer that has already given those procedures to us. And also, to help our lenders, we created several templates. These templates can be used by servicers to create procedures, and that definitely accelerates their documentation process. And we recognize that there are going to be some lenders that would use warehouse funds to fund their loans. So as I mentioned earlier, we have approved more than 20 e-note warehouse lenders that are ready to go. But if a lender decides to use a warehouse lender that is not on our list, then we need to approve that warehouse lender as well. But all in all, in most cases, our overall approval process takes less than a week. And in some cases, we have also seen instances like, where we were able to start the approval process in the morning and get them approved by the afternoon. So like just a couple of hours.
That's fantastic. I'm surprised to hear that, but that's excellent. That sounds excellent. I guess that's a best case scenario right now, huh?
Yeah, that's best case scenario, correct. Yeah.
Sure. Okay. Well, in this approval process, and you just described some various steps in this. Are there anything particular steps that trip up the lenders regularly? Particular, the hurdles you find repeatedly in your interactions?
Yeah. I think lack of servicing procedures is one of the reasons why the Freddie Mac approval process gets delayed. And, we have seen lenders reaching out to us early on in their implementation process. I mentioned earlier that we actually went to the customer site and we were engaged in a 2-day end-to-end process mapping with them, right? So folks like that engage us early on in the process typically would have gone through all Freddie Mac eMortgage requirements, and as such, they will be ready with all the documentation by the time they reach out to us. And those are the ones where, I said we can approve in a single day or a couple of hours, etc. But lenders that reach out to us only at the time of approval typically find we find that they don't have documented procedures. Sometimes they may not have completed certain necessary steps. But the most the single most reason we delay the approval process is because of the lack of servicing procedures.
I see. So it sounds like a very experiential journey for these lenders too. That they're discovering along the way. For the folks for the lenders who have the smoothest approvals, is there anything common to them? Do you have any tips you would share with everyone on the call?
Yeah, I think Brenda touched on those earlier, right? So I think the process mapping is a key. Every lender need to go through their process mapping, even though e-closing is really, a back-end transaction, meaning it really happens, towards the end of the loan processing, right? But even then, you really need to make sure you go through end-to-end process. For example, you really want to determine when do I want to talk to a consumer about their preference. Do they really, I know that in this market I can offer e-closing. I can offer maybe, say, remote online closing. But when do I talk to my customer to understand their preference? Is it right after, they are approved? Or is it, once we are ready to draw docs? So trying to go through the end-to-end process will build a very seamless experience for both the associates as well as the, consumer. And then from Freddie Mac approval, perspective, right? If you start talking to us early on during the implementation process, if you start going through Freddie Mac guidelines, right, you will know our requirements better, and as such, you will be ready to engage us with all the documentation we need so we can approve you very quickly.
Okay. So mind those servicing procedures, definitely, and also noted on this slide here talking about the approved warehouse folks out there. So definitely keep these things in mind too, and we'll maybe get a little more of that in the Q&A that follows. So here's the roadmap for you. Maybe you want to talk a little bit about Freddie Mac's view of the importance of this and your participation in helping folks with these things.
Yeah, definitely. So I think I touched on some of these already, and Brenda touched on this also, right? I think this is a 5-step, roadmap to help you think through various things as you go through. So think of it like almost like a checklist, right? You need to determine, do I really want to have full e-closing in all my markets? Do I really want to have maybe a e-closing process in which I'm going to have all documents e-signed, but exclude notarized and recordable documents because that part of the ecosystem is still developing, right? So you need to go through that kind of scoping process. Then obviously you need to make sure all your partners are ready. Your notary agents, settlement agents, warehouse lenders, etc. Right? Just make sure that they're all ready to support your process by the time you roll out your process. And then technology, we need to make sure you have and I think Brenda touched on this also, which is you need to look at the technology from the perspective of, is it going to fit into your existing process nicely or not? Does this e-closing provider, as an example, have a built-in integration with my doc provider? So if so, then I don't need to worry about manually tagging documents for electronic signatures, as an example, right? So try to evaluate technology carefully, and of course security. You definitely want to make sure the systems are secure, and then operational process. So we touched on these servicing procedures, right? Make sure you have documented procedures, and make sure you have the appropriate training materials for your agents, right? Even though e-closing is not rocket science, because it's a new experience for them, try to make sure you have screenshots, you have well-documented procedures, and spend some time with your agents, so that your associates, so that they are fully ready to go by the time you launch the process. And then obtain investor approvals. Each investor is different. So Freddie Mac, as an example, requires security review of systems, because we believe that we want to make sure the systems are secure before lender uses those systems. But not every investor may be requiring those. So go through investor requirements and make sure you are able to comply with those requirements by the time you are ready to deliver a loan to them.
Excellent. This is a really excellent slide. Something that I would recognize is something that's really well thought through and prepared on a lot of levels. And you mentioned that the Freddie Mac eMortgage team can be engaged with helping with the process design and other aspects of this, and that you are engaged across the vendor providers and folks like that. What about what are some of the resources Freddie Mac has for lenders who want to learn more, and where they can find these resources?
Yep. So on FreddieMac.com, you will find a lot of resources. We have dedicated eMortgage pages, and so the roadmap that we shared on the previous slide, right? That's just a high-level overview of the roadmap. We also have a very detailed interactive roadmap on FreddieMac.com, and in addition to the implementation roadmap, we also have pre-recorded webinars. So if a customer wants to understand, okay, what is e-closing means, what is eMortgage means, right? What is e-notary means? So starting from there all the way through Freddie Mac approval process and other aspects. So we have a 4-part pre-recorded webinars that are available for all our customers on FreddieMac.com. And then we also have a list of Freddie Mac reviewed technology vendors that can help you with your eMortgage implementation. We also have a list of Freddie Mac reviewed eNote warehouse providers and various other resources. So again, I know this is a lot of information. So whenever you go through these materials, if you have questions, right, feel free to reach out to Freddie Mac eMortgage team. And the email box is on the slide here. It's called, the email address is eMortgage_team@FreddieMac.com, and we are a dedicated team of eMortgage professionals that can help you with any questions that you have.
Excellent. Well, it's very thorough, and a lot of resources is very, very thought through, and I think it reflects some of the experiential processes that the lenders are still working through. This is not a single methodology or a single infrastructure. So many fragmented infrastructures out there right now. So I think we're going to move along now, having gotten all this information, to some Q&A. I want to remind you once more, you still have time to get questions in if you like, and we can follow up with you after the call for whatever we don't get to here today. I'll put that resource slide back up in a couple of minutes so you can jot down the email address for your reference. But thanks again, everybody. We have so many folks on the call today with a lot of good questions. So let's kick things off. Brenda, and anything here, I'm sorry, for anything here that's proprietary or you don't want to answer, you can just say you don't. But I think from an experience standpoint, you might be able to share some thoughts with some of the folks on the call today. So, are you, Brenda? Are you funding all e-notes with all your warehouse lenders right now? I mean, what's the status of that? If that question makes sense to you.
It does, and no, we're not. When we first started doing e-notes, we had to go reach out to each of our warehouse lenders to see who had the capability or the desire, and we worked with them to create a process for e-notes. But today, we still have several warehouse lines that do not want to participate in e-notes. So it was something that we actually had to go out and do a little bit of work to enable us to be able to do the e-notes.
Right. Do you think that becomes a policy issue or something that needs to be sort of accelerated in the future? Is there a mandate for that, do you think, in your organization or other organizations?
I'm not quite sure of the question.
Well, in terms of accelerating the e-note percentage, I guess, if that's the right term for it, is there a program to sort of accelerate that versus more traditional processes, or to mandate them?
Definitely, we try to do as many e-notes as we possibly can, and we allow opt-out. But as far as just entering into a transaction, we disclose the e-signing and the e-closing, and we start the transaction out that way, and then allow the consumer and or other parties to opt out. Okay, great. Here's a question. I think I'm going to direct this one to Raj for starters. Maybe Brenda wants to join in too. What's the difference between an e-closing and an e-note, or is there a difference, Raj?
There is a difference. E-closing is really the process, right? So any closing process where some or all of the closing documents are electronically signed, right? And that process is called e-closing process. And it could be a full e-closing, meaning all documents are electronically signed, or it could be a hybrid e-closing, where some documents are electronically signed but some are wet signed, right? An e-note is just one document. So if you could have a note electronically signed either in the full e-closing process or in the hybrid e-closing process. But as long as the loan includes an e-note or electronically signed a promissory note, you have a e-mortgage loan. Don't ask me why industry came with the definition, but that's the definition industry has. But whenever Freddie Mac or any other major investor says e-mortgage, they are really referring to a loan that has an electronically signed promissory note, regardless of whether the other documents are electronically signed or not. Hope that helps.
Yeah, I think so. Here's another question, I think, for Raj, and I'll push us back to a slide that addressed this. Talking about the states that have approved electronic notarization, and the question is, does that include states with executive orders approving e-notarization, or just the ones who have passed statutes already?
Yeah, so this list definitely includes those states with the executive order, but I think we were basing our analysis not just on the executive orders, right? We were also looking at other aspects such as how is the legislative landscape in terms of the acceptance of, interstate acceptance of remote notarial acts performed by another state in a notary, right? So a lot of analysis went into this, but definitely the presence of executive orders was one factor, in addition to any states that have the legislative framework for permitting their notaries to engage in remote only notary transactions.
I see. Okay. All right. Here's a question. I think it's kind of a jump ball because I think a lot of folks have different views of this depending on where you sit in an organization, in a lender organization, as to what this actually impacts and applies. But are there any, Raj, and I'll also ask Brenda after that, are there big misconceptions about digital closings or things you think should be made clear across the organization in the communications?
Yeah, a couple of misconceptions come to my mind. One is a lot of people confuse e-note with electronic notary process. So they conclude that they cannot have loans with electronic note in all 50 states, right? So electronic note or e-note is governed by e-sign and UITA. So that document can be electronically signed in all 50 states and DC. Whereas electronic notary process, which we talked about quite a bit in this discussion, is not uniform across the country. So it is definitely growing in adoption, but that is where some people confuse and think that they cannot have loans with electronic note in all 50 states. Another misconception that comes to my mind is people think that when it comes to eMortgage or electronic closing, they need to have all or nothing kind of approach, right? I mean, I'm not saying that's a wrong approach, but you can realize significant benefits even if you are able to do a hybrid e-closing, right? Meaning that you have some documents electronically signed. Yeah.
Mm-hmm. Yeah, and this is touched on in another question about, is there a benefit in a closing where you have notarized documents wet signed and other documents e-signed? That should not be a barrier to embracing the e-mortgage process. That's right. Yeah, that's right. Yeah. Brenda, what about you? I mean, internally in your communications, is there resistance on certain areas, or do you think there's misconceptions about what you folks are doing, or do you think you have the communication part of this down pretty well? Brenda, can you hear me, or are you on mute maybe?
Hi. I'm right here.
Okay.
So we've worked through most of those misconceptions, and we don't get much misconception at this point. And I just believe that it's because we did so much education on it, and we educated all the loan officers and realtors and the various participants initially. And we work with the same people over and over again, so I think that we worked through misconceptions. But as to the point what Raj was making as far as the partial close, the e-close and the full e-close, I have to say that for us, the benefit of an e-note, it's very beneficial, regardless of whether the borrower has to sign additional wet documents. But from a consumer standpoint and from the title company and the other participants, there's much more benefit in a full e-closing.
I see. Exactly. And
so for us,
go ahead.
I was going to say, for us, we still feel there's a benefit for an e-note only, but the preference would be a full e-closing for all parties.
Yeah. This seems to be a theme with several of the questions that we've gotten today on the acceptance of certain documents and e-signatures on certain documents. We cannot implement any files if So the truth on acceptance needs to be communicated well internally in the organization. And again, Freddie Mac is giving a lot of resources on helping out with this, and it is kind of a collaborative process. We had one other question, Raj. I'll just throw at you. We'll be starting to wrap up here. You mentioned a lot of those approved vendors, but I'm pretty sure you're already of your answer to this already. You don't have any preferred technology partners on this, but it's basically just subject to your list and the submissions as you folks work through the vendor list, the warehouse list.
That's right. That's exactly right. Yep.
Sure, exactly. Okay. Well, I refer people back to this slide here on resources and the high-level roadmap Raj shared. I would pin that up on my wall. I think I will, to try to get a good handle on some of the exigencies and requirements here moving through the transition to the eMortgage transition. And so with that, I want to thank everybody for all your questions and your participation today. We had a lot of folks on the call with a lot of good questions. And anything we didn't get to, we will follow up with you on today. So I want to thank Raj Penaganda, who is the eMortgage program lead at FredlieMace, for sharing and offering his advice and counsel on a lot of the things going on at FredlieMace, and also especially to Brenda Usher, who is the COO at Land Home Financial Services, for sharing some of that internal journey with us. We did make a recording of this session today. We'll send it along to you as soon as we have it available. And I want to thank all of you for staying with us throughout this hour. It's been very informative and really expanded my views of this. I'm Jim Erickson for National Mortgage News. And with that, I'm going to say everybody have a great week. So long, and thanks for joining us. Bye-bye.